Hi, this is David Roberts with Roberts Business Services, and here to welcome you to another video on common mistakes in QuickBooks. We're talking about names today. There are 4 different name types within the QuickBooks company file. There are vendors, customers, employees, and other name. How does it work? When you enter in on a register a name that is not recognized by QuickBooks, you get this message, name not found. There's 2 options here, well 3 if you choose cancel. Quick add, which basically just puts whatever the name of the new vendor, customer, whatever it is, into QuickBooks for the first time. No information like address or anything like that. That's quick add. Setup is where you put all the information in. Remember, my policy is the more information you have, the better. But if it's something like going out to eat at a McDonald's, you don't need the address, phone number, email of all the managers and stuff. Just it's a common sense thing. You don't need all of that setup. So we're just going to talk about quick add. Now here are our name types. What a lot of people do when they're entering in a new transaction with a new vendor or customer is they don't know that it makes a difference where you put them. So if you don't know what that person is, whether it's a vendor or a customer, they choose other. Here's the problem with that. While that name is retained in a list of other name types, it's not always possible to find that person if you're looking in vendor or customer, and for a bookkeeper who doesn't know that you put it in other, we don't know to look there. I look there because I find a lot of other names in there, and some of these other names include employees that shouldn't be in there, owners of the business that shouldn't be there. So try to avoid using the other category if you can. We're going to assume that YYY is a vendor. Click OK, and now YYY is added as a vendor. And you can enter the transaction. That is one thing. I'm going to add a little bit to this video. One more common mistake in QuickBooks is that people do not back up their company file. And what that does is that leads to a risk of losing your data, of losing everything that you have. I had a client that I normally backed up every month. And in one particular month, there was a lot of transactions. And for some reason, I got off schedule, and I backed it up anyway. It was an additional backup. That week, the building was struck by lightning, and every computer in there was completely fried. So you want to make sure that if you're going to back up a company that you do it on a regular basis, every week, every month. It's up to you, but make sure that you have backups available that don't go too far back. I've seen people lose as many as 6 or 7 years worth of transactions, including tax records and everything, by not backing up. All right. Now, there's 2 options with creating a backup. You can create a local backup that you can store on a flash drive or on a hard drive on another computer. If you attempt to back up your company file to the same computer that the company file is on, it's going to give you a warning and ask if you really want to do that. You can do that. It's not recommended because, again, if your computer is stolen or struck by lightning, it doesn't matter that you made a backup. So what you should do is either back it up to a flash drive or create a backup and email that backup to yourself, put it in Google Drive, put it in Dropbox, and make a habit of doing that. If you don't, you could lose everything, and recreating that is going to take a lot of time and money. So please, back up your company files. Okay, this has been David Roberts with Roberts Business Services. Thank you for watching, and I hope you enjoyed it.